The Canadian government is under tremendous pressure to let foreign capital back into Canadian real estate. The first source is from the supply side, where developers are trying to get the Canadian government to move towards a Australian model where foreign buyers are allowed to buy brand new homes or pre-construction homes, but not allowed to buy resale homes. The second lobby comes from the post-secondary industry, where institutions are on the brink of collapse because of a huge decrease in international student enrollment. And this is the demand side of the real estate equation. So let's get into it. There are two types of ways that the foreign capital really interacts with Canadian real estate. We're going to go through a history of all of the different foreign buyer bans and taxes and their impact in the market and why these businesses want to have that flow of foreign capital resurrected. The first way that foreign capital interacts with Canadian real estate is as investors or buyers, where offshore equity buys into pre-construction homes or buys resale homes. We now have a group of as many as 25 BC developers who have signed a letter to the government to get rid of the foreign buyer ban, which is recently extended. At the beginning of 2024, the federal government announced that they would be extending the foreign buyer ban, which was set to expire in 2025. They extended it until 2027. I think that they'll let the ban continue until the end of 2027. It would be political suicide to try and get rid of it. And then they'll probably just try and quietly let it expire. That's your supply side. Real estate supply is created through foreign investment. Supply is also taken from the market through foreign investment in that way, in such that foreign buyers can compete with regular homeowners, regular families, regular Canadians who are just trying to buy a house. They can typically pay more for it because sometimes they have some sort of ulterior motive to pay more for the property. Maybe they're laundering money. Maybe they want to shelter their capital from a foreign government. So they create supply by buying from builders. They destroy supply by buying houses from the resale market. But with that being said, in many cases, they're renting these out. So they're taking away ownership supply, adding rental supply. But foreign investors were often infamous for leaving houses empty. The government introduced the underused housing tax in January 2022. It specifically targeted foreign national owners of housing in Canada. It became a huge headache. You had to do a filing with the CRA. They pushed the deadline because not a lot of people were doing it. This was part of their efforts to create a beneficial ownership registry in Canada. We actually don't even know who owns a lot of the corps that own this real estate in Canada. File the underutilized housing tax or their beneficial ownership information, they would pay a fine. And this fine basically just became like a speeding ticket, right? Or a parking ticket for a lot of these people. Or the way I like to think about it is an anonymity tax, right? So they're paying $5,000 or $10,000 a year, and that's the fine they have to pay, and then they don't have to disclose. So the incentives were a little bit broken, and it hasn't really resulted in any meaningful progress in figuring out who owns a lot of the foreign invested real estate in Canada, but also in eliminating further foreign investment in real estate in Canada. Foreign investors are limited through direct ownership, but also through the total percentage of a corporation that they can own. But if we don't know who owns the shares in a corporation, it's really hard for us to police whether or not they are owning it. The other thing about the foreign buyer ban, and if you go on CMHC's website to read this, it talks about who is subject to the foreign buyer ban. There are tons of exceptions contained in the Act and the regulations. The Act provides exceptions, including people who are temporary residents studying in Canada if they're enrolled in a program, have filed income tax returns, have been physically present in Canada for a minimum of 244 days, temporary residents working in Canada for 138 days, and have not previously purchased a residential property in Canada while the prohibition is in effect, refugees. There's also exemptions for certain types of property. So you can't buy a property in a CMA or a city area, but you can buy them in rural areas. And they can also buy non-residential or commercial properties. Any residential property with 4 or more units is technically available for purchase. The first part about these exemptions is interesting from my perspective, where they talk about temporary residents in Canada. And I'm going to use that to segue to this second way that foreign capital gets into Canadian real estate. So there are these two types. The first pipe I explained, which is your investor buyers, basically foreign capital buying Canadian real estate, either as a pre-con or as a resale home. The second one is tenant capital. And this is your international students and temporary workers who are paying rent. Actually, the Bank of Canada even observed in the 2024 Monetary Policy Report that strong population growth is supporting inflation and rental prices. You can see a strong correlation between population growth and rental prices in this chart they put out. And if you look at this now based on rent CPI falling, because rents are falling in many markets in Canada. Mike Moffat posted a chart on Twitter a while ago. His tweet self-destruct, so it's not there anymore, but it was posted on Reddit. It shows the colleges that had the biggest growth in international students. Some of the ones you see a lot in the headlines are Conestoga College, Canadore College, Sault College as well. There was actually a big battle between Sault College and Conestoga, their presidents, with some expletives being thrown at one another. But these are the colleges that you're now seeing headlines coming out where Ontario colleges are on the brink. Will someone come to the rescue? Or international student cuts lead to 10,000 job losses in Ontario colleges, which is the second largest job cut that we've ever seen in Ontario history, by the way. So you've got this pileup of policy where you've got the underused housing tax, this beneficial ownership registry, foreign buyer bans. They're basically carpet bombing policy without really measuring the target because we don't have this proper beneficial ownership registry and we don't know who owns the real estate. And all of this has led to this thing where basically Vancouver developers have been trying to push for a foreign buyer ban to be removed. You have a handful of developers who signed this open letter asking the federal government to reconsider the foreign buyer ban and move towards a model like Australia. The Australia model is basically, in BC, there's a ton of foreign capital active in the real estate market. It has always been a hotbed for foreign investment, and pre-construction is one of the most active places for that. In 2016, in a Maclean's article called China is Buying Canada Inside the New Real Estate Frenzy, the article featured a lot of analysis from Peter Routledge, who was an economist at National Bank at the time, but is now the superintendent of financial institutions. So he regulates Canada's financial system, which is good. It gives me a good feeling that somebody who is aware of this problem is in that seat. But, Routledge's research actually found that 10% of new condominiums being built in central Toronto were going to foreign buyers. Chinese buyers in 2016 shelled out nearly $12 billion on real estate in Vancouver, accounting for 33% of the city's sale. And for Toronto, he pegged that number at $8.4 billion, representing 14% of sales. There was a more controversial study of home sales in 3 of Vancouver's most expensive neighborhoods, showing that 66% of houses sold during a 6-month period, starting from September 2014, went to Chinese people with non-anglicized names. The author of that report, urban planning professor Andy Yan, interpreted that to mean that maybe this isn't foreign capital, but new arrivals or new Canadians. Our population growth is driven by immigration. You have both foreign capital, but you also have migrant capital. People move to Canada and bring capital with them. This is another layer on how capital from outside can play a role in Canada's real estate market. Canadian developers are really pushing towards this Australia model. So let's talk about how the pre-construction system works in the land down under. So foreigners need this system called a FIRB approval, FIRB, which would allow them to buy new dwellings or off-plan dwellings. And they're mostly barred from buying established or resale homes. The price impact in Australia has been that foreign money is funneled into pre-construction houses. 50% of foreign deals are new builds in Australia. And the total foreign share of buyers is just 1.8%, but it clusters into the new unit niche. The result of this policy has been a price premium on new stock. Only 46% of new apartments list below 1 million Australian dollars versus 85% of existing units. And the RBA, the Royal Bank of Australia, modeled that every extra foreign buyer lifts inner city new apartment prices by roughly 2 to 3%, according to Oxford Academic. They have solid analysis on average house prices alongside the number of foreign transactions. They model Australia beside Canada. We're 2 of the only countries in the world that have seen a house price index accelerate as bad as it is. Do we really want to go back to that Australia model? It's great for developers who want to keep these prices high. The reality is if developers want to sell more houses, and if we want to get housing more affordable, unfortunately, or fortunately, and I would say fortunately for more market participants, house prices have to come down. And house prices can come down as a result of many things, but the easiest way to do it is to decrease the cost structure of creating houses. Development charges come down, construction costs come down, land prices come down, soft costs come down. If we're in a recessionary environment, recession typically brings us disinflation or even deflation, which means that you'll see the firms that these developers are paying start charging lower and lower prices in order to get the work. And then that deflation gets pushed to the end purchaser of the unit, the same way inflation gets pushed to the end purchaser of the unit. And so if developers can reduce their prices, then they can sell more units. If prices come down and people can afford to buy them, then they're going to buy more units. But everybody's trying to resist this happening. A big reason why they're trying to resist this happening is because so many people previously bought at those higher prices that it's really hard reputationally for a developer to do a down round or sell at lower prices, especially in the same buildings or same subdivisions. We saw protests in Ontario against home builders, massive home builders, like the biggest home builders in Canada, because buyers felt that they lost their investment and they felt that was the developer's fault. So I understand where developers are coming from, because market participants are going to roast them if they have to sell units for less than the other units in the building, functionally devaluing all of the existing units. So there's a lot of people trying to avoid that outcome. But the reality is the economy will win. The economy always wins. And it is likely that market forces will eventually force that to happen. And so my advice for those market participants is to expedite the speed at which they can get to that part of the process. Now, the last thing I want to look at is the impact on prices. You see a lot of policymakers before, when they were trying to justify why they let foreign buyers stay in the market. I want to talk a little bit about what happened in BC, because BC's premier has basically said that they will not be going back on their foreign buyer tax. But what happened when BC put in their foreign buyer tax is prices dropped 20 to 30%. In fact, for luxury Vancouver detached houses, they still haven't recovered their 2016 peak. It's obviously pretty clear that foreign buyers do play a big role, because as soon as you tax them away or regulate them away, prices start falling. After BC did this, a lot of foreign capital left the BC market and went to Ontario. In Ontario, we saw a huge surge in house prices in 2017, especially in the GTA and more luxurious areas. Places like Aurora, Ontario, posting the biggest price gains during that period. The Ontario government was forced to do the same thing BC did, which was put in the non-resident speculation tax, which banned foreign buyers from buying real estate in the Greater Golden Horseshoe area, which is basically an area that goes up to Aurelia, down to Niagara, and out to Northumberland County. And then as far west as sort of your Wellington, Waterloo. Although I think the original layer didn't include places like Kitchener-Waterloo and Ottawa, because I know once Ontario did the ban, a lot of capital actually started flowing out into some of those second tier cities. And then they had to make it province wide and increase the amount of the tax. And now Doug Ford has said that in 2017, when they did this ban, foreign buyer activity was only about 5%, and that their tax reduced it from 5% to about 2%. But if we go back to that Australia study, foreign buyers only participated to the magnitude of, I think it was 1.8%. So it doesn't really take that much for them to move the market. This is why developers want them to be able to purchase pre-construction homes in places like Canada or Australia. Developers want to protect that price premium against the resale market. If you go back 5 or 10 years, pre-cons were priced a little above the resale market. But then what happened was construction costs went up substantially and interest rates came down and buyers went crazy and builders started to capture a bit of a premium above the resale market. And that started just before COVID, like 2019, but then it really got crazy, especially 2020 and 2021, when resale condos were in a bit of a downtrend because everybody was moving out of the city, but your pre-con condos were going up and up in price, and builders were capturing this huge spread. This really led to knock-on effects like them being able to pay contractors more, which led to this huge construction cost inflation that we could see. And it really broke the whole housing market and the way that things function. And now you're starting to see, as a result of the slowest condo market in over 30 years, according to Urbanation, a leading research firm in the pre-construction space. They showed that the slowest condo market in over 30 years is causing construction to collapse. Now, what happens when construction collapses? Contractors are looking to bid on more jobs. Contractors are able to be more competitive on pricing. People get laid off, so they are able to take lower wages when they go and try and find a new job, which starts reducing labor costs. Material companies aren't selling as much material, so in order to sell more material, they have to reduce prices. What happens as a result of that? Gradually, you see the cost structure of pre-construction housing decrease. If the cost structure decreases, then the sale price can also decrease. It gets pushed onto the end users. And the only way the developers are going to be able to sell more units in this environment, from my perspective, and a lot of things could change in this environment in later that could maybe introduce a bull case. But in this environment, while we're in a bear market, the only way that you're going to sell more houses is if prices come down further. even if you're counting on the foreign buyer ban or the removal of the OSFI stress test to create a bull case, it's a really double-edged sword because maybe they lift the ban, maybe there's a FOMO rally, maybe foreign capital floods back into the market, maybe first-time buyers go lever up and go crazy when they have the stress test removed. I don't think that's the likely outcome, but it could happen. The more likely outcome from my perspective is that they remove the stress test and the foreign buyer ban and nothing happens. And sentiment worsens because people realize that even those layers aren't going to help or save the real estate market. It's usually when things like this happen, when rate cuts come in and it doesn't save the market, people lose even more confidence. And policy changes come in and it doesn't save the market and people lose even more confidence. When you let capital back into the market and it doesn't save the market, Canadians are very timid. It's not like in the US where they just rush in. Yeah, I'll shoot first, ask questions later. It will take us a very long time to recover all of the lost sentiment. A lot of people want foreign capital back. It is very unlikely that the government is going to concede defeat on all of the lobbies pushing to get more foreign capital back into Canadian real estate. From my perspective, unlikely that we're going to end up with the Australian model, which has negative externalities. I do think that the outcome will be 2027, the foreign buyer ban will expire and they'll quietly let it fizzle out and hope that nobody mentions it and it'll get a little bit of news, but it's whatever. It ran its course. It did its job, similar to the stress test. It did its job. It'll probably get removed next year based on the studies at OSFI right now. As an industry, we have a problem to solve for the next 2 years until that takes place. And that problem, it comes with admitting that the market is broken, accepting that the market is broken, and figuring out a way to deliver houses through that period. If you're a big, strong developer with staying power, pay your interest, wait it out. The market will eventually recover. But how long can many developers afford to do that? I don't know the answer to the question. Let me know what you think in the comments and subscribe, please. And check out some of my other stuff.